Alright, welcome everybody to another video on the After Hours channel. For those of you that don't know, my name is Anthony. I'm a long-term investor with a passion for money, stocks, and personal finance. On this channel, I'll be sharing my insights and experiences as I track the performance of my dividend portfolio. I believe in the power of long-term investing and want to show you what it's like to be a long-term investor in today's market. Whether you're just starting out on your investing journey or you're a seasoned pro, I hope to provide valuable information and resources that will help you make informed decisions about your money and investments. Join me as I share investment strategies, discuss current market trends, and provide tips and tricks for managing your personal finances. Subscribe to stay up to date with the latest from the After Hours channel, and let's build our wealth together. All right, before we jump into the video, let's do a little overview of what we're going to be covering. So first and foremost, like every video, we're going to do a portfolio update. That's the portfolio you were just looking at previously. After that, we're going to be taking a look at my recent buys and sells. Third on the list, we're going to be taking a deep dive into my largest holding, and that is Microsoft. After that, we're going to be jumping into my recent dividends. After that, we're going to be taking a look at one subscriber's question, which I do in every video. So without further ado, let's kick this thing off. This is going to mark episode 6 of Road to 1 Million. If you guys are unfamiliar with what that is, I'll be tracking this portfolio that you see on your screen right here all the way to $1 million. You'll be able to see my trades, which are weekly, my dividends in a six-figure portfolio, and also a heads up on which companies I'll be buying in the future. So as you guys can see, the portfolio is currently sitting at $120,000, which is substantially higher than my previous videos. So it's been a good time to be in the market, and we'll also be taking a look at that as well. Taking a look at the one-day performance, we can see that the portfolio is up 1.04%, or roughly $1,200. Taking a look at the 1 week view, we can see the portfolio is up 2.5%, or almost $3,000. Taking a look at the 1 month view, we can see the portfolio is really starting to pick up some momentum. The portfolio is up almost 8%, or $8,500. 3 month view looks pretty much the same as the 1 month. It's actually slightly down. And year to date, we can see the portfolio is currently sitting at $9,000, or 8%. As I mentioned, it has been a good year to be invested in the market. The portfolio has consistently gone up, but with that being said, this does not forecast what the rest of the year is going to look like. The market could go down or it could continue up for the next few months, but only time will tell. If you guys are interested in all of the holdings in this portfolio, they are on the right of your screen right now. Feel free to pause the video or take a screenshot to get a better look. If you have any questions about one of these holdings, let me know in the comment section below, and I'll possibly make a video about it in the future. Moving on to my recent buys, and that is over the course of January. You can see all of those on your screen right here. So coming in at number 1, we bought some more Vici, $105. After that, on January 6th, I bought an additional $250 of Microsoft, which we'll be covering shortly. After that, I actually bought $100 of Apple, which I still believe is below its fair value. Next, I increased my position in Berkshire Hathaway with a deposit of $150. January 11th, I bought an additional $166 of Microsoft. After that, on the same day, I upped my position in Union Pacific with a $166 buy. And lastly, for the month of January, I bought $168 of Schwab's Large Cap Growth ETF. One thing I want to mention, and that is the reason that I didn't buy too many stocks in the month of January, is because I actually took the money I would typically invest and I invested it into my studio that I have here so that I can upgrade the quality of content I put out for you guys. Jumping into the main part of this video, and it's actually a poll I put up on my YouTube channel. I asked the community, I said, what stock would you like to see a deep dive analysis on? And by the majority vote, 44%, everyone said Microsoft. So without further ado, and to keep my word to you guys, I want to do just that. This video, we're going to be doing a deep dive analysis on my largest holding, Microsoft. Starting off, we can see that Microsoft is trading at $252. Taking a look at the value section, we can see that Microsoft's current PE is roughly 27%. Their forward PE is also 27. Down at the bottom, we can see that their free cash flow yield is 3.17. So it's higher than most companies, but not as high as others that I have in my portfolio, specifically Apple. Moving on from there, we can see that Microsoft currently has a Petrosky score of 7, which is rated high. If you guys are unfamiliar with what a Petrosky score is, we can take a look at that right now. The Petrosky score is a number between 0 and 9 that ranks the quality of a company. The higher the number, the higher the quality of the company. The score is determined by assessing 9 different financial aspects of the company. The company is given 1 point for each of the 9 standards being met. If you guys take a look right here, you can see those 9 standards that they are referring to. Feel free to pause your screen or take a screenshot, but in the future, this is what we're going to be looking at when we're talking about Petrosky score. Taking a look at the balance section, we can see that Microsoft currently has roughly $100 billion in cash. They are in debt $56 billion, which brings their net cash to $43 billion. So this company is definitely cash rich. Since this is a dividend portfolio, it's only right if we take a look at the dividend yield, and we can see that it's currently 1.12%. So definitely not as high as other companies I have in my portfolio, but when you're dealing with a company this high quality, I'll take it. Taking a look at Microsoft's revenue, and we can see that it has consistently gone up year after year. This graph is unlike many other companies when we're talking about revenue, and Microsoft has the free cash flow to back this up as well. If we take a look at their 1 to 10 year averages, we can see that in the last year, they've increased their revenue by nearly 18%, and in the last 10 years, they've increased it by 10.4%. Closing out 2022, we can see that Microsoft brought in nearly $200 billion. Moving on to their EBITDA, we can see that it closely resembles their revenue. In 2022, their EBITDA was roughly $100 billion. Taking a look at their averages again down here at the bottom, we can see in the last year, they've increased their EBITDA by almost 18%, and in the last 10 years, increased it by nearly 15%. If you're an investor, this is definitely what you want to see. Moving on to one of the most important financial aspects of a company when you're doing analysis, and that is free cash flow. Taking a look down here at the bottom, we can see that Microsoft increased their free cash flow by 16% in the last year, and in the last 10 years increased it by 8.3%. In 2022, Microsoft brought in $65 billion in free cash flow. If you're unfamiliar, that is a ton of money for any company when we're talking about free cash flow. Now let's take a look at another financial aspect I advise everybody to take a look at when you're looking at buying a different company, and that is stock-based compensation in relation to their free cash flow. If you're unfamiliar with what stock-based compensation is, it is going to be this blue graph down here, and it essentially means how much Microsoft is paying their executives and employees in stock. Not many people know this, but this is actually a form of dilution. If you're buying into any company, I always recommend that you take a look at their stock-based compensation. This will let you know if they're diluting you as the shareholder by issuing more shares to their executives and employees. So, as we can see on screen, they paid their employees $7.5 billion in stock-based compensation in 2022. If we compare that to their free cash flow, we can see they earned $65 billion. So therefore, their stock-based compensation only makes up a fraction of what they earn in free cash flow. Therefore, they are not diluting us as the shareholder. If we take a look at their net income, we can see that it also resembles their revenue slightly. Now, it does look like there was a few dips and plateaus over the course of 2015 to 2018, but they quickly got things back on track and have increased it year over year. Moving on to another aspect which we covered at the beginning of this analysis, and that is their cash versus debt ratio. Cash is obviously going to be the green graph that you see on your screen, and the red is going to be their debt. So debt, we can see it's $47 billion, and they have $104 billion in cash on hand. If I click on capital lease, that will factor in additional debt which they pay for buildings and warehouses and essentially the rent that they have to put out. If we combine the two, we can see their debt was $47 billion plus an additional $11 billion of capital lease debt. Factoring in both of these, we can see that Microsoft still has an enormous amount of cash on hand, and they could easily pay that debt off if they wanted to. When I'm doing analysis on any company, I typically don't look at capital lease as bad debt. So I typically just exit out and don't even include it in my financial analysis. Moving on from there, there, let's take a look at their dividend, and as you can see, it has consistently gone up year after year. Microsoft is one of those companies that has so much cash on hand they can consistently pay out their dividends year after year while also giving us a raise as the shareholder. In 2022, their dividend is 62 cents per share. So you would earn 62 cents per share that you owned of their stock. One aspect I always like to take a look at when I'm taking a look at any company's dividend, and that is how much they've increased it over time. Over the last year, Microsoft increased their dividend by nearly 10%, and over the last 10 years, they increased it by 11.45%. So as the investor, this is definitely something I like to see. Not only is the share price appreciating, but they're also giving me a raise when they pay that dividend out, further compounding my gains over time. Moving on to outstanding shares, and we can see that Microsoft has consistently been buying back their own shares since 2005. Now, if you're new to investing and you're not sure what you're looking at, essentially, and in simple terms, Microsoft has been buying back their own stock. This artificially inflates the price of the stock itself because they keep buying back so many shares. From an investor standpoint, this is something you definitely want to see, especially if the company has a large amount of cash on hand and they're doing share buybacks in a reasonable and smart way. Let's move on to return on capital employed, which is arguably one of the most important financial aspects when doing analysis on any company. This is right up there with free cash flow. As we can see, Microsoft has a pretty high return on capital employed. If you're unfamiliar with what this is, let's take a look at 2022. So in 2022, Microsoft earned 31% return on capital employed. That would mean if Microsoft invested $100 of their money, they would have got in return $131. Therefore, earning a profit on that money invested and using their cash wisely, not diluting us as the shareholder or burning cash from our investments. Typically with most companies, you'll see a return on capital employed of roughly 8% to 12%. As we can see, Microsoft is well above the average on some years like 2008, having a 52% return on capital employed. That is extremely high. If we take a look at their lower years, we can see in 2017, they had a 13% return on capital employed, still above the average of most companies. What does this tell me as the investor? Microsoft can invest my cash, use it wisely, and return money to me as the shareholder. Now, if we take a look at my largest holding, Microsoft, in my portfolio, we can see that over the last 5 years, that stock has returned upwards of 165%. If you guys look right here, you can see that I have $26,000 invested into Microsoft. My current returns are $365. Now, that may seem low for the amount of money I have invested, but you have to understand that Microsoft has been going through a dip recently, as you can see on your screen. Over the course of that dip, if you watched any of my previous videos, I have consistently been buying Microsoft. If I look at my recent orders of Microsoft, you can see exactly what I'm talking about. Now, if you're interested in seeing any of these a bit closer, feel free to pause your screen. As I mentioned, I have been buying this company consistently as long as it trades below $300, which I believe is Microsoft's fair value. If you guys have any questions about this company or my holding in general, let me know in the comment section and I will get back to you. But without further ado, let's take a look at my recent dividends. Over the course of January, I received 3 different dividends. First one is coming from a holding of mine, which is Jeppy, and that was for $34.01. After that, on January 5th, Vici paid me $71, which is a huge dividend. And within the last 22 hours, JP Morgan, which is another sizable holding of mine, paid me $24.45. If you guys are interested in some of my older dividends that I've received, you can see them on your screen right here. As always, feel free to pause the video if you want to take a closer look. Lastly, I want to move on to one subscriber's question that I keep getting over the course of all of my videos. And essentially what they're asking is, if this is a dividend portfolio, why do you have stocks in it that don't pay dividends like Amazon? Now, I've answered this question before in a previous video, but I want to just cover it again. I own a few different companies in my portfolio that do not pay a dividend. Number 1, Berkshire Hathaway. They historically have not paid a dividend. And number 2, which that subscriber was asking about, and that is Amazon. To make a long story short, The reason that I hold these in my dividend portfolio is because I did not want to miss out on the potential gains of owning such high quality businesses as these are. I put my dividend investing mindset aside and finally bought into these companies so that I can have exposure over the course of the next 20 years. If you're in this position and you don't want to open up another taxable account just to invest in other non-dividend paying businesses, I would personally advise you to just put them in your portfolio and disregard the fact that they do not pay a dividend. When you're dealing with such high quality businesses like the companies you see on your screen right here, I think it's important to remember that you're buying a business. You're not just buying the dividend that business pays. Yes, it's definitely nice to get paid every month or every 3 months, these large dividend payments, but when you own a company that has historically been bringing in large amounts of free cash flow, I think it's worth noting that you should buy that business and put the minor inconvenience aside that they do not pay a dividend. Now, I understand this may not be everybody's philosophy when doing dividend investing, but to remain transparent, I want to let you guys know that that is how I am operating this portfolio that you see on your screen. With that being said, this is going to conclude episode 6 of Road to 1 Million. If you have any questions about a topic we covered today, feel free to leave your questions in the comment section below. If you have any questions about my holdings or want to see a deep dive analysis on one of your holdings, let me know as well. If you want to stay up to date with the companies I'm buying over the course of 2023, don't forget to subscribe. And lastly, if you guys are interested, I put together a dividend investor apparel line. I made 2 different designs you guys can take a look at, and the whole goal of it was to make it very simplistic and more of my style, and hopefully yours as well. I'll be leaving a link in the description for you guys to go take a look if you want to, and it's also worth mentioning that 50% of all profits I earn off of these products I'll be donating to veterans charities. Now with that being said, I'll see you in the next one. Take care.